Friday, September 8th, 2017, Monaco 64, home of alternative economics and contrarian views. So the US dollar is really in trouble right now, breaking through key technical levels yesterday. I've spoken in the past, in the last few weeks, about how the dollar is looking really bad and how I think we've made a long-term top in the dollar, and that usually dollar cycles last for on average 7 years. I'll put that video above in the cards, and I'll also put it below in the description. So it's just before 8 a.m. London, so I'm going to look at what the markets are doing this morning. Gold doing well this morning. It's been kind of climbing a wall of worry. It's broken out, through that 1295 level and 1300. We finally did that, and it's been kind of a controlled retreat, in my opinion, by the bullion banks. Silver, they're still keeping it fairly under control, but we've broken through 18. So let's look and see where we are right now. Gold is at 1353.70. That's spot gold, not futures. It's up $4.50. The range overnight has been 1347 to 1358. So gold trading fairly well. Silver 1850, up 4 cents. I noticed yesterday before the COMEX close, which is around 1:25 p.m. New York time, like half an hour before that, they brought it down back below 18 briefly, but silver was able to rebound and close above 18, which was technically quite important. Overnight range has been 1823 to 1808. The Dow is down 35 points, 21,750. S&P down 4.5, 2460. Crude oil 49.26 WTI. Yeah, the dollar really weakening here. The big move has been against the yen. Dollar has broken through 108 against the yen. That's very bearish. That's also helping gold, of course. We're at 107.70 the dollar. Yen down almost 0.75%, which is quite big for the FX market. Down 74 pips. The euro up 0.33% at 120.65. And even the pound sterling, which is kind of become very weak currency overall, is up 0.33% at 131.36. Dollar index, yeah, we're almost around 91 now, and I'll show you a couple of charts here to show you how the dollar index is looking. Really not good. Bring up this chart here. It's going back about 2.5 years, and you can see there last year there was a low at 91.91. We broke that level about 10 days ago or so. You can see there, and then the market rebounded back up. I think that was at the height of the North Korean crisis, and was the crisis subsided and the dollar rebounded. And I made a video. I said, is this a dead cat bounce? I thought it was a dead cat bounce, and I guess I was right. I'm not saying I'm always right, but now we're clearly broken that key support there at 91.91. As you can see there, we're 91.18 roughly dollar index. Now I'll show you another chart of the dollar index here, so you can have a better idea why this level is so important. More of a longer term chart here, almost 5-year chart. As you can see there, there's very little support there. It's like falling off a cliff now, the dollar index. Those the low below, the level around 80 seems to be a magnet now. I think that, that area there around 80, and you can see the rise from 2013, 2014. That was helped by the Abenomics, the Japanese policy, of heavy-duty money printing, not that they hadn't done it before, and also devaluation of their currency, and also the fact that the U.S. monetary policy started, is moving a little bit ahead of the other major central banks. There's all the talk about tapering in the U.S., and the U.S. was moving towards normalizing, and I use normalizing very, how can I say, it's very reservedly, because monetary policy in the U.S. is not normal. Yeah, so that's how the dollar's looking. And why is it happening now? Well, it seems to be happening since, the end of last year, beginning of this year. The dollar index topped around 103.80. And, one thing that's going on right now is all the, the debt ceiling talk, all the debt talk. The U.S. has had a debt ceiling, for over 50, 60 years. I'm not sure exactly when they passed that law, but it's been a long time. And now, there's talk that President Trump actually is trying to work out with the Democrats on how to actually eliminate the debt ceiling. And don't get me wrong, I don't think it has mattered that debt ceiling, it's just like a credit card limit. And they've been raising it, for, years and years. And it hasn't helped contain the national debt. But by just eliminating it, it's going to make it even easier for these politicians to spend. So there's a story here on Wall Street Journal that it says Senate passes bill on storm aid, debt limit, and government spending. But I think this debt limit thing has just been kicked down the road, the can, for another 3 months to December. But it says Donald Trump signals he's open to making more deals with Democrats despite anger from fellow Republicans. I guess I can't blame Trump for doing that. The Republicans haven't really been too helpful for Trump. Yeah. And it says here in one of the paragraphs in the story, this is from the wallstreetjournal.com, Mr. Trump also announced he was open to eliminating the need for Congress to hold votes on raising the country's borrowing limit, a policy change supported by Democratic leaders and opposed by conservatives. Later, after a phone call with Mrs. Pelosi, who had told him that young immigrants were anxious about his decision to scrap in 6 months an Obama-era program providing a shield for deportation, Mr. Trump had tweeted that they had nothing to worry about. Well, that's something different. Yeah. And why is the debt ceiling so important? Well, historically, the debt and money supply are one. In the fiat money system, the money is backed by the national debt. So the more debt there is, the less value that fiat money will have. So here's a chart of, and I've taken it from Gold Chart R Us, comparing U.S. debt and debt limit versus the price of gold. You can see that price of gold has moved pretty much in lockstep with the increase in the debt, since 2012, 13, that relationship has kind of been usurped, so to speak. Since the beginning of 2015, the debt ceiling has been suspended, but the debt hasn't stopped growing. We're at 20 trillion right now, and gold has been, capped down. I don't think it can be kept down for much longer, and I think we'll catch up, to that debt, to the national debt. So that's why it's important. They've been able to kick the can down the road. You can see that since, 2015, the debt ceiling is around 18 trillion, just over 18 trillion. And that's where it's now by law. So that's the debt ceiling there. And let's have a look at the gold chart. I think now we can clearly say that gold is breaking out. You know, that trend line from that long-term trend line from the high in 2011, that's clearly been broken now. And we broke through as well earlier, you know, earlier this month. We broke through the 1336, which was the high on election night for gold. And now the next key level is 1375. If I'm not mistaken, we hit on July 4th last year. And after that, you know, gold's looks like it's gonna keep going up. Of course, it's not gonna be in a straight line. Yeah, so what else? Low right now, the Fed is really worried about low inflation. One of the board members of the Fed, Brainard, said that she's worried about low inflation. Of course, they measure almost nothing in that PCE, and it's around 1.4%. They wanted it at 2%. But from what I remember, you know, like in the 70s, 80s, the talk was that we had to eliminate inflation because inflation is a bad thing. But now the Fed seems to think that it's okay to have 2% inflation, that having less than 2% is a bad thing. You know, but I can understand why they say that, because in a fiat money system, you have to keep the debt growing. And if you don't have inflation, you can't keep the debt growing. And we are at a point where the system is just like ready to maybe do something crazy, implode. I don't know. But the other thing that's interesting, you know, a few days ago, one of the board members of the Federal Reserve resigned. Well, he's going to resign in the middle of October, I think. Stanley Fischer, the vice chairman. So as you can see here, the board, there's 7 board members they're supposed to have in the board of governors of the Federal Reserve System, and they're nominated by the president. So right now, we've got Janet Yellen as the chairwoman. I mean, how can a chair run a board? A chairwoman. Stanley Fischer as a vice chairman. He's going to go. And then you have Jerome Powell and Lael Brainard. So after Stanley Fischer goes, there's only going to be 3 there. And also, it's expected that Yellen will leave in February. So Trump has an opportunity to change the board of governors and influence it dramatically, because these guys are nominated for 14 years. So he could really change the character of the Fed. I personally think the best thing Trump could do to the Fed is propose to abolish I think it's the 16th Amendment that created the Federal Reserve System. That's the best thing he could do. You know, we don't need a central bank, or the U.S. doesn't need a central bank. No country does. Banking and currency should be left to the markets. So that's it. If you enjoyed this video, please like, share, and if you haven't subscribed to my channel yet, please do. You can also follow me on steemit.com and on Twitter. So I'll talk to you later. Bye.